say that. Chief will never say that. I'll never say that. We've been getting more and more of these fake accounts now. There's only so much we can do to kind of regulate this, but the best thing that I can tell you is you'll never get a solicitation from me asking you to send me money. I'll trade for you or anything like that. Okay, so I wanted to verify. Type at wire, yes, you understand that, because I've been getting many, at least 3 or 4 a week, people shooting me messages saying, hey, give me more information about you trading for me, or hey, what do you mean by, set up an account, all that kind of good stuff, okay? So if ever in doubt, one of the best things you can do is just, reach out to me. You can send me a direct message on this Facebook page. It's always cool. It's another place you can kind of communicate with me. I try to respond. To as quickly as possible. I maybe don't get to all of the questions that I get, but I try to respond. So hopefully, again, if you have questions or comments or concerns or whatever, you can respond to me there. Okay. We're going to talk about a formula today. I'm very, very formula focused in my trading. I love formulas. You guys have heard it many, many times before. The key to success in this business isn't that we don't just wake up and say, hey, today is going to be the day that we start making money in the markets. Unless, especially if yesterday we didn't make money, and the day before we didn't make money, and the month before we didn't make money, and the year before we didn't make money, and we continue to do the same things, well then why in the world would we expect to make money today? You see what I'm saying? So it's got to be based on a formula that works, that makes sense, and that can be duplicated. I am not a fan of placing trades based on anything subjective, because I don't believe you can consistently duplicate subjectivity. I believe you have to consistently duplicate something that is black and white. Right? You see what I'm saying? Something that is there has to be absolute truths to something. It's got to be either yes or no. There's got to be yes or no answers, and that's the only way that we can consistently make money in this business. We can make money every once in a while by trading off of things that are subjective, by trading off of gut feelings and different things like that. We can absolutely. I've made money trading off of gut feelings and subjective things and my thoughts and my feelings, but I can't do it consistently. And those trades that I make money on, what they do is they actually end up over time building bad habits. And even if I make money, let's say on something that worked this time that I can't duplicate in the future, the reason why it creates bad habits is because now I have a false sense of confidence, right? Because if I can't duplicate it, then it's really based on nothing. It's fabricated. It's false, right? So a formula has to be something that can be duplicated today, tomorrow, and forever. Okay, so you've heard me say before, I'm sure, or I guess I'll ask the question. Have you heard me say before that there's 2 types of traders? There's more than 2, but there's 2 main types of traders. Give me a second. Let me adjust my volume here. Some people are saying the volume's a little low. Let's see if I can turn this up. The level on that is all the way up. Okay, so how's that? Is that better? Is that better? I don't know if that's better, if that's worse. Hopefully better. It's worse. All right, let's see if we can make this a little better. Worse. Now it's better. Now it's worse. Now it's better. I don't know. It's better. Is it better? I don't know. Let's see if we can just kind of tough through this. Okay. All right. So there's a lot of background noise. Well, okay. So here's what I want to ask. Have you heard me say there's 2 types of traders? There's the trader that has more of a fear of losing money. That's one type of trader, and then there's another type of trader that has a fear of missing out. Not necessarily a fear of losing money, even though we all hate losing money. I don't like losing money. But there's either more of a fear of losing or a fear of missing out. Time to wire, yes, you've heard me say that before. I am a trader that does the best I possibly can on kind of overcoming my fears. In fact, you can only do this for 17 years, and after so long in the market, you get to a point where you're no longer really have a lot of fear. Your fear of losing, once you understand a formula, kind of gets transferred into a fear, and I'll say instead of fear, more of a frustration over missing out. And so I'm going to show you an example here. And this is one of the most frustrating things, and I'm going to ask you guys if this has ever happened to you. This is one of the most frustrating things that I go through as a trader, and I would love to say that I never go through this, that this doesn't happen to me anymore. Well, that'd be a lie, because it does happen to me. In fact, I'm going to show you an example of it happening to me. So let me show you an example of this. So let's say we have a trader that looks at this, and let's say that this is the major A-B sequence down, and price, let's say, has done this. Right? Price is like right here. If price is right here, then we should know, well, we have a pretty high probability of price going back up to this 382 retracement right up here, right? Type of the wire, yes, you've heard that before, right? The 80-20 rule. So kind of our target on this would be up to 190.04. Okay. So what we do as traders, and a lot of you have mastered this, a lot of you have kind of, you've been doing this. What we do as traders is we now say, okay, well, let's figure out ways to get long. And so every trader out there would look for reasons and ways to get long. And let's say that there's some type of pattern that looks like this. Now what's happened is we broke a trend line, and we've started this kind of big wave higher, right? Big wave higher. And now we've finally got the reasons, because it looks like we're putting in a reversal pattern, reasons to get long. And so what you do is you start to get long. And you look for ways and reasons to get into the trade, and I'm going to just kind of adjust this a little bit. Look for ways and reasons to get into the trade. And so you pull in maybe some sub-fibs or some minor fibs that look like this. Right? And so we've got this upward. So what we know is price is going up to this 382. We're very confident price is going up to that 382. We then pull in these sub-fibs or minor fibs, and we've got this upward AB just in an extension. And that means that more than likely we're going to put in our new AB sequence that looks like this. So if this were the picture right here, we would be saying, oh, this is absolutely brilliant. This is just a gorgeous looking setup. It's a gorgeous looking setup. You know, we have kind of maybe a potential crowning formation where, you know, we've got the left tip, center tip, and then now if we can get a retracement down, we've got the right tip, kind of crowning formation. This is absolutely awesome. We've got a 382 retracement up there. We've got kind of the reversal pattern happening. And so what you do, and I am the king of this, right? I am absolutely just, I find these type of patterns all the time. And here's what I do. I say, okay, great. You know what? Let's do this. We've just hit an extension. We're at a high price. Let's buy down here. Buy down in here. So this is a great setup, right? So we then say, okay, well, we're going to buy down in here. And I'm sitting on my hands, and I'm waiting, and all of a sudden, price makes a weak attempt to retrace, and then starts to extend higher and doesn't go down to my buy zone. Type in a ME if this has ever happened to you. Yeah. Yeah, it's happened to me many, many times. And this right here is, for me, this is like almost like a slap in the face. The reason this is almost like a slap in the face to me is because I hate being right but not making money on when I'm right. That's the most frustrating thing that can happen to me as a trader, is when I'm right and I don't make money. It doesn't equate to money in my account. Or it doesn't equate to as much money in my account as it should. I can't stand it. So I am a trader that gets much more affected by missing out on a trade than I do on losing money. I'm okay with losing money because I have a process and I've done this long enough. What I hate is losing out or missing out. So now what happens is, and if you're newer in this business, what happens is you look at this and you say, oh, what in the world? You got to be kidding me. We didn't get a retracement down into my buy zone. Now we've went up to even a higher price, and we know where it's going. We know it's going to 90.04, and we don't want to miss the move, right? But we also can't be willy-nilly about it. So what we do is we say, okay, well, you know what? I'm going to pull in my new fibs. These are my new fibs, right? And I'm gonna then, I'm gonna then start buying on even at the, let's say at the 236 retracement, because last time it only retraced down to a 236, so I'm gonna start getting in a little earlier, right? So maybe now I start getting in a little earlier. And if you're a trader that has a fear of missing out and you see this, well, you start getting in a little early, right, at a 236, because you see that we're getting shallow retracements, so you start getting in long here, and you put your stop 10, 15 pips below this low. If you're a trader that's a fear of losing money, it then starts to reverse a little bit, and then all of a sudden it goes down to that 382 retracement into that true buy zone like you should have been buying. You get stopped out, you're licking your wounds, and then it goes up and hits your target. Or right, because now you're frustrated because you missed this. You were waiting to buy down in here, right? You had a perfect setup. You're going to buy here, you're going to put your stop here, your target up there. Well, you missed that trade. So now you're buying now you're frustrated. Now you're going to buy the 236 because you saw a shallow retracement here. So you buy the 236, you put your stop below the U-turn, you then get stopped out, and instead of pulling the trigger down in the real buy zone down here, you're too busy licking your wounds and kind of pouting about the loss that you just took. Type in a wire yes if that's ever happened to you. Or you follow the rules, right? Or you follow the rules like I do, and you systematically follow a process, and you've been doing this for years and years and years and years like me, and you say, okay, well, we just hit this extension, so therefore that's no longer my buy zone. I buy zone now, and I know the 80-20 rule, so I'm going to be disciplined enough, and I'm going to buy down in here. But then price doesn't retrace down again, and then it goes up and hits my target up here. And so here's the biggest frustration of all this. I analyzed this as a professional trader. If I analyzed this, that this thing was reversing and heading up to 90.04, all the way down here is where I analyzed it. Yet, do you see how I could have missed out on the entire move by getting I call it getting a little too cute, getting too cute with my trades. I got to tell you, this is one of the most frustrating things a trader can go through. And I've been doing this long enough where for me, I've just kind of got to the point of accepting that I'm going to miss some of my great calls. Which, you know what, is BS, is bullcrap. I shouldn't miss some of my great calls. I should be able to participate in every move that I forecast. Because I know what I'm doing. I know where the market's ultimately going. I know ultimately where the markets are heading to and in the direction it's heading to. And I should be able to make money if it goes there, right? And so this is a very frustrating thing. And what happens if you're a trader that has a fear of missing out, and this scenario happens, and you didn't get long here, and you didn't get long here, and then it goes up, and you literally missed out on hundreds and hundreds of pips because you were maybe a little too cute with the trade, what it's going to cause you to do the next trade setup is it's going to cause you to adjust your rules, right? It's going to cause you to, let's say it another way, to break the rules that you originally had. Type in a wire yes if you agree. And that's when you go through this vicious cycle of 1 step forward, 2 steps back. And that's a death spiral. It's absolutely horrible. So why do I bring this example up? Well, because this example is playing out right now. Right now, as we speak. Let me show you. How many of you have made some money in the Euro Aussie? Type in me if you've made money in the Euro Aussie. Yeah, Chris says, I have, but not enough. Yeah, I second that. So I've done well in the Euro Aussie, but I've left probably about 150 to 200 pips on the table. That sucks. Because guess what? I was on here a week and a half ago telling you guys exactly what's going to happen, and this thing has played out the exactly the way that I said, hasn't it? Hasn't it literally played out pretty much exactly the way that I had set this up? Yes or no? Yep. So why did I miss out on about 150 to 200 pips worth of this huge move that I knew was going to happen? Because I got too cute. Because I got too cute with my trade. So I originally got in on this first push higher. I got into here. This was a great trade. And then I said, okay, guys, now we're going to get really cute with our trade. And now you see this A, B sequence right here, this A, B. Then what I'm going to do is I'm going to, you know what, let's wait for a retracement into our new buy zone, the 382, because the 80-20 rule, the 382, plus we have these trend lines that we should be going to hit. X marks the spot, right? So we get really cute with this because we're really good technicians. We get really cute. We say, okay, now we're going to buy down in here. But remember, Tyson has a rule. Well, I have a rule where if a price isn't hit, then I don't count it, right? So did we go down? Yeah, we got within 2 pips, but did we, yes or no, hit the 382 retracement? 382 was at 38.72. We went down to a low of 38.74, so we didn't hit it, did we? No, you guys have heard me say many times, close doesn't count. Listen, close doesn't count. I can't trade close because close, what is close? That's subjective, right? So just because that was 2 pips away doesn't mean it didn't go down into my retracement zone. So it didn't go down into my buy zone yet. And what happened? Literally 2 pips away from my buy zone where I was going to start buying, boom, rocket ship up. Are you kidding me? Yeah, this is the picture of frustration to me. I made good money on this first pop. This was great. This was a good trade for about 150, 200 pips. That was great. Well, you know what? I shouldn't be just up 150 pips. I should be up 400 pips in this. Are you guys understanding the frustration here? And I would love to tell you, listen, I'm a professional trader. This is how I generate my income. And I would love to tell you that this isn't an issue that I go through. I literally cost myself thousands and thousands of pips on an annual basis because of this crap right here. Because I get too cute with my trades. I am really darn good at analyzing where the market's going to be going, and then I get too cute. And you know what? For me, I do well enough overall where it doesn't really affect me all that much until I start to look back on the trades like this one, and I realize, well, wait a minute, this cost me a couple $1,000s of income. So let's say I do this, 10 times a year, I miss out on a trade like that. We're talking tens of thousands of dollars worth of income. That's like 3 or 4, don't tell my wife about this, that's like 3 or 4 vacations we could go on. Seriously. That's craziness. It's craziness. How many times have you seen, I'll just use me as an example, how many times have you seen me analyze something very, very well, tell you where it's going, and then get too cute with the analysis and miss the trade? I'm sure you guys have seen it happen quite often. Sometimes it works out brilliantly. Sometimes, Tyson, you get a little too cute with things, and you think you can outsmart the market, right? Right? But it's not thinking I can outsmart the market. It's just getting a little too, again, the best way I can describe it, just a little too cute. So I'm going to show you guys today a strategy that is 100% black and white. Because there's some of you in here, I know for sure, some of you feeling my pain on this because you said 2 pips is close enough for me, and there's some of you in here for sure, I hope, some of you in here that took this trend line here, started buying on the break of that trend line. There's others in here like me who said, you know what, I'm going to wait until we get that actual 382 retracement, and I'm not going to start buying. And who's right? Well, obviously the person who started buying early was right. The person who, let's say you started buying early and then we retraced deeper like I thought we were going to, well, then you would have been wrong. Then you could have gotten in at a better price, right? So I wanted to show you this example because, well, simply because This is a frustrating example of, guess where we're heading to? 142.29. And I shouldn't be mad over this because I've done well. Over the last week and a half, it's provided me some decent income, and I've done well on this. But I've done about half as well as I should. About half as well. And for me, I can afford, because I've been doing this long enough, for me, I can afford to go through this. Psychologically, it doesn't affect me anymore. It's still frustrating, but it doesn't affect me anymore. But you guys, type in a wire yes if this kind of stuff does have the potential of affecting you in your next trade. It does. And whether you think it does or not, it absolutely does. Now, some of you might be like saying, well, Tyson, you made money. You should be okay, but it doesn't matter. Psychologically, we are constantly battling two psychological aspects in this business. The psychological aspect of fear and the psychological aspect of greed. Right now, the aspect of greed is starting to kick in, where you're saying, geez, I made $3,000 on this trade, but I should have made $6,000 on this trade. And you start to calculate that money that you've lost, or that you missed out on, and you say, you know what, I'm no longer going to do that. You see, and then you start breaking the rules going forward. You can't do that. You can't do that. And so I want to show you guys this. I'm going to update my workspaces a little later today. Hopefully, you guys have been playing off of some of these workspaces. Hopefully, they've been, doing okay for you. Dollar CAD here. You see maybe some issues with the dollar CAD. So I'm no longer in the dollar CAD right now. Based on everything that I just went over, does anybody potentially see an issue with what I've got analyzed here in the dollar CAD? Does anybody see it? The issue is I might be getting a little too cute with this, right? Type in a wire yes if you can see and agree. Oh, Tyson, dude, you just went over the fact that you might be getting a little too, I might be getting a little too cute with this. Why do I believe we're coming down in this area? Well, that's a prior area. I call it kind of a battle area, right? It's an area that the bulls and the bears kind of battled out before, right, in this area. And we know that that price has a tendency of repeating itself and retesting kind of key psychological levels. You can see that the bears kind of broke this down in this area multiple times. And then the bulls, obviously when they got control, this was an area that they battled at. So I believe we're heading down there, but you know what? We might not get down there. What if I keep my buy zone here and price only retraces to the 382, or price only retraces, has a shallow retracement and then starts to rally up? Well, that's going to be very frustrating. Now, I'll have ways that I can get in it, but you know what? Again, this is another example of where you get a little too cute. So I want to talk about a formula today, and I want to show you guys a formula that I don't know if you guys have noticed. I haven't been on as many client webinars over the last 3 weeks, as I normally am. And maybe you've noticed, maybe you haven't. If you haven't noticed, that's okay. It's not going to break my heart. I miss you guys. Hopefully you guys have missed me. But what I've been doing is I've actually been on non-client webinars talking about the Momentum Breakout course. And I've been really, really kind of immersing myself in this strategy and really just focusing on this formula, because what I've realized is that this formula of the Momentum Breakout is one of the formulas that if somebody were brand new, I don't want to just think I don't want you guys to think that I'm just talking to brand new students, but if somebody were brand new, this is about as easy and as profitable of a process that you'll ever see with the Momentum Breakout. And if you're not brand new, this is actually a very profitable, systematic formula. It is a black and white, clear-cut, systematic formula. So let me show you this. You guys have maybe seen this before. I'm sure you have. But I want to show you the exact way that if as the trader I am today, if I just started trading this strategy right now today, this is exactly how I would trade it. And I would trade this with absolute confidence. Okay, so I want to show you this. When we're going through a strategy and we're kind of trying to, and then we're going to try to find some trades using this formula. So regardless of what strategy we trade, we're trying to answer 3 core questions, right? Mainly 3 core questions. And those questions are, number 1 is, what direction should I trade in? Right? That's kind of the first thing we need to answer. Number 2 is, where should I get in? And number 3 is, where should I get out? Right? Would everybody agree that those are, regardless, and obviously there's a lot of different ways we can say that with risk management, and what about 2 to 1, all this, but really when you boil it down to the simplest 3 things we're trying to answer, regardless of whether you're a target trader, basket trader, divergent trader, whatever type of trader you are, those are the 3 things we're really trying to figure out. Which direction do we need to trade in? Where should I get in and where should I get out? That's it. And what we should do as traders is we should try to find the easiest answer to all 3 of those questions, because the easiest answer is usually the right answer. The easiest is usually the right answer. And so let's do this. Let me show you the process of using the momentum breakout and the process of using the entire course tool. So this is what's called the sentiment strength line. And this is, the sentiment strength line is on a daily. And I'm going to show you this. We're going to go through multiple examples, and I want you guys to see how formula-driven this is. Okay, so sentiment strength line, the SSL. This is based on momentum. This is not based on time. I need everybody to understand this. These boxes are formed based on the momentum of the price. When you're getting a purple box, the purple box means it's a box that's being formed, but it's not formed yet. All we want to know, all we want to look at are the boxes that have been formed. So it's not like we're going to ignore this box, but this box is purple, meaning it hasn't been truly formed yet. Okay? So we care about the green and the red boxes. And the way that this works, just so everybody knows, is this looks for essentially a momentum move that takes us above the prior 3 bars before. So the only way that this will turn, let's say that this current bar right here that's being created right now, let's say this current bar turns green. Okay? So let's just act as if that's green. Well, if that turns green, the only way that we will get a red box is if price has enough momentum to close, to have a daily close below the prior 1, 2, 3 boxes. Type in a Y or yes if that makes a little bit of sense. So then if it has enough momentum to do that, then it will turn red. And that's the reason why this one turned green. Why? Because it had enough momentum to close up a 1, 2, 3. Okay? All right. So that's just real quick snapshot of what the sentiment strength line is doing. Okay, so now let's keep this very, very simple. Let's keep this very, very simple. Let's go back and let's say that we only traded to define our direction. Let's say that we did this. Red boxes equals looking for shorts. Green boxes equals looking for longs. Okay? And that right there is the only thing we're going to do on the for the sentiment strength. So what I'm going to do here is I'm going to mark right here is when we turned red. Right here is when we turned green. So if I mark, in fact, let's go back even further. Let's mark the last, right here, we went from green to red. We were red here, and then we went from red to green, and then we went red, and then we went green. So what I'm going to do is this. I'm going to use this as my direction indicator, right, to tell me which direction I should be trading in, and then I'll go to the micro price detector to get in. So here's what we're going to do. I am going to, so now down here, so this is the sentiment strength in the daily. Down here is the micro price detector. Now I don't want you to think these are 1-minute bars. These are not 1-minute bars. algorithm is calculated off of a 1 minute bar, but it is not, these are not created off of 1 minute bars. It's a 1 minute chart that it's calculated off of, but it's not, they don't represent, each box doesn't represent 1 minute, okay? So we're not trading off of a 1 minute chart. I don't want you to think of that. It's all based on momentum. Here's what I'm going to do though. I'm going to link this. So I'm going to say, let's do this. Let's go from here to here. I'm going to box these off. In this area right here, we would have had a sell bias, right? We would have been looking to sell. So I'm going to turn that pink. In this area right here, we would have had a buy bias. So I'm going to turn this blue. Again, so I'm just going to go back and we're going to look at this historically, how this would have performed. In this area right here, we would have had a sell bias. So I'm going to turn this pink. And in this area right here, we would have had a buy bias up to current price. So I'm going to turn this blue. Is everybody following so far? So in this area, we would have been looking to sell. We would have been looking to buy. We would have been looking to sell, been looking to buy. Everybody following? Pretty easy. Okay, so now what I'm going to do is I'm going to link these colored boxes over, I'm going to link them to this bottom chart. So what we're going to do is I'm going to link this to there. And I'm going to link this to there. And link this to there. And link this to there. So now all of this sell, buy, is now linked to the micro price. Okay? Okay, so now we know our direction. Now the way we get in, right? Where do we get in? Well, we're going to use the micro price. We're going to use this micro price detector to get in. So number 2, 3 red boxes equals sell. 3 green boxes in a row equals buy. So 3 red boxes in a row equals sell. So as an example, if I zoom back right here, let's say we had a sell bias. We didn't, but let's say we had a sell bias right here and we got our first 1, 2, 3 red boxes down. Type in a wire yes if you understand that's where we would have entered. Okay, so that's about as easy as it gets, right? So for us to take this trade, we would have to have the SSL red and get 1, 2, 3 to enter. So now how do we get out? All right, so now we know how to enter. So then to get out, this is what we do. When in a cell, 3 green boxes in a row equals exit. When in a buy, 3 red boxes in a row equals exit. Okay, so in this example down here, if the SSL was red, then we got 3 red boxes on the micro price detector. We then would have gotten out right there, right? So you would have went short here and bought here as an example, right? Type in a wire yes if that makes sense. Your stop, you'll see that you could actually manage this and run this just using your stop based on the color changes. But if you wanted to, you could put your stop above the prior. So on this short example, you could put your stop above this prior color up here. Okay, so now that everybody's following, here's what I'm going to do. So now what we're going to do is we're going to say, I'm going to mark this there. So we're going to say that in the sell zone, let me get rid of this. This is when we started trading. Let's say this is when you started trading the micro price detector. And now we're in a sell zone. From January 3rd, that's when we shifted into a SSL sentiment strength sell zone. So therefore, that's when we needed to start looking for sell, right? So that's from that point. So we wouldn't have been in this short. We're not going to count this short. We wouldn't be in this short. The first short we would have taken, we'd wait for the next sell signal. The first short we would have taken would be right there. That would have been our first short. Why? Because that point right there, what was the date? On the 9th, we were in a red SSL, and we got our first 3 red box micro price detector, 3 red box entry down. Now, when did we get out of this trade? Well, if we're following the rules, we stayed in this trade until we get 3 of the opposites. So we would not get out on 2 right here. You don't get out here. You don't get out here. We would stay short in this trade. We would let the strategy do what the strategy is going to do. Get out of it. Get out of the way. And don't try to be cute with this. Let the strategy do its thing. We then get out there. This trade here made 220 pips, plus 220 pips. Type in a wire yes if you agree 100% that SSL said we need to short. We would have entered here. We would have gotten out there. It is what it is. Whether you want to believe it or not, that is absolute truth. Yes, Catherine, that is true. Okay. Is that, so far, is that pretty easy? Now here's the deal. Are we buying, would we be buying right here? Now there are some traders, I call them opportunity traders. If you want to take every trade, long and short, you can. You absolutely can. I'm showing you the way that I'm a trend trader, so as a trend trader, the way that I've traded this, the way that I will recommend trading this is only trading with the longer term trend, which is the SSL. So no, you would not buy there. You would now be in cash. You would now be in cash. But your first trade, you made 220 pips. Now, I'm not going to count. Now, right after we got out of that short, the SSL went into a buy zone, right? We then went into a buy zone. But I'm not going to count this long because we were already 1, 2, 3, 4, 5 boxes in by the time we shifted into a buy. So I'm not going to count that buy. That's fair, right? I'm not going to count this. Even though it looks like it would have been a good long opportunity, I'm not going to count it. We then had a shift down. We're still in cash. We didn't take this buy because technically the signal came in when we were in a sell zone. We didn't take this buy. We now have 3 down. So what are we doing? We're waiting for the next 3 box signal higher, right? Bam, there's our first buy. Again, I just need to verify. Type in a wire yes if you agree. Our first buy signal after the SSL turned green would have been right there. Yeah, right? There's maybe some of you that could have, maybe would have bought here, but the first new, fresh signal, so you had, some opportunity traders maybe went long here and then out here, but we didn't take that trade because we're only trading with the trend. Nope. George says you should have been on the first up. No, we shouldn't have, and the reason why we shouldn't have been is because this long position right here, we had our third right there, which got us out of our short, but we were still, the SSL was still red, so therefore I'm not going to count this long. That's literally the most, this next one, here's the reason I'm not taking this one, George, is because I'm not taking this 1, 2, 3 is because we never got 3 against us. No. You guys, I want you to understand. I'm not counting this right here because you would still be in this trade right here. So you'd still be in this. So this trade right here is indicating that you're already in this ops. Okay, so now we're talking new signals. The next new signal is right here. So that's the next first new signal. We then get in there and we get out there. This trade here broke even, break even. Break even. We had one long position in that long opportunity, broke even. So now I'm not going to count, right? Right when we basically got out of that short position, can you see how we basically shifted right into a downtrend? You see that? But guess what? I'm not going to count it because I'm going to say that we got out of this long for break even, and we didn't know that the SSL was, we maybe thought the SSL was going to go red, but it hadn't went red yet. Right? So I'm not going to count this first short. Even though, look at this first short, it's an absolute home run. You guys see this? I'm saying that we missed this. I'm saying we missed this, and you guys could say, well, geez, Tyson, I don't think we would have missed that. I can tell you right now, there's a lot of you that wouldn't have. But if we're only counting the first new signals after the SSL changes, type in a wire yes if you understand that we didn't get a new signal in this down loop. Now, some of you might have said, well, Tyson, I would have gotten in here, right? But again, I want you guys to understand how profitable this is, even trading it just the most conservative way that you could trade this, just following the process. So now what are we doing? Well, you're trading the next new signal. The next new signal comes in right there. And yes, I'm telling you, if you're trading this style, you missed this entire move down. Now, you didn't have to. Again, there was maybe opportunities you could get in. You could also make an argument that you had 3 here, and then the SSL went to a red, so maybe you would have jumped in right there. Oh, John, John says you're better off just trading the micro price detector. Well, yes and no. There are times when you're better off. Like this is an example where you're better off. There's also times when you're not better off, when you're way better off just trading with the trend. But now we're in this short. And so we finally got a short that in this opportunity here that paid off. We made 60 pips there. Because if you were an opportunity trader and you took this trade, well, you also took this buy here and you lost 20 pips there too. But we didn't lose that 20 pips because we're only looking to short. So we made 60 pips on that short. And now what are we doing? Well, we're still looking to short. So we short again here. And look at, we take our first stop right there. So we lose 80 pips. But what happens right when we lose, in fact, almost at the same time that we lose, right before we take a loss, the SSL turns blue right here. Let me link this. Type in a wire yes if you could see literally the day, like basically right around the same time, you get a stop on this and the SSL turns blue. So therefore, we would have taken this long. This is a long that we would have taken right there. So we would have stopped out for 80 pips and we would have taken that long. And then the fact that we had 3 down, we actually would have taken that long and got stopped out. And you would have been, oh, geez, that sucks. Okay, all right, well, we're following the rules. We lost 80 pips there. I don't need it. So far, what have we done? We've made 220. We broke even, made 60, lost 80, lost 80. And now we're in a buy zone, so we're only buying. So now we go long here. So this was our first long, we lost 80. Now we're long again. When do we get out? Get out right here. This trade here produced 100 pips. We don't short because we're not in a sell zone. We're only interested in buying. We buy again here. And that takes us to current price. And this current long position is up 200 pips. So instead of Tyson, instead of being me on this ride higher, I made about 150 pips. Type in a wire yes if you can see that this trading the micro price detector in the SSL is up 300 pips. Yep. Once again, it's outperformed me. So you're still long. You're still long in this. Why? Because the SSL is still green, and you're still in a micro price detector. You're waiting to get out. You're just going to wait for 3 red against you, and then you're going to get out. So trading the most conservative way you possibly can, taking every single one of these trades as is, and not even count. Look at this. We didn't even count. And some of you in here say, geez, Tyson, I don't even think that's fair not counting this. I'm not even counting this 360 pip move down. that some of you would have caught. If you want to count that, you can, but let's say we didn't. Let's say we just traded this style. Well, we made 220 pips, then we broke even, then we made 60, then we lost 80, made 100, and made 200. 420 pips in 2017. I got them all, dear. I'm pretty sure I got them all. So 220 plus 60 minus 160, because we get 280 pip losses, plus 200 plus 100, yeah, 420. So 420 pips. 420 pips. You guys want to see another example? Is this starting to make sense? Are you guys seeing how this is like, there is literally no question on what you should be doing. Which direction, where to get in, where to get out. All right, let's go through, let's do Euro New Zealand. Okay, so Euro New Zealand. Everybody agree that we went from a buy zone into a sell zone into a buy zone, right? Everybody see that? So let's do the same thing. Let's mark this. From here to here, we would have only been buying. From here to here, we would have only been selling. From here to here, we would have only been buying. Does everybody agree with that? Based on if we only trade with the sentiment strength line. Now, the nice thing about trading only with the sentiment strength line is you, me, every single momentum trader out there is going to come up with the same exact direction. For example, if you're trading this right now, which direction should you be trading in? Up or down? Should you be looking to buy or sell if you're a momentum trader right now? Every person in here, we've got over 250 people in here, all of you should say, if you're trading this, you should all, every one of us, there shouldn't be any guessing, like, oh, I wonder, no, you're buying. Why? Because we've got green bars. So now what I've done is I've linked this. I've linked these. So let me see how far. So to the 18th. So from the 15th through the 11th, we basically would have bought. So this entire area in here, zoom out. Let me see if I can bring in more bars. See if this works. I didn't think this one. Okay. All right. So here's what we're, because of the algorithm, it limits me on what I can. Oh, there we go. Perfect. Okay, there we go. All right. So does everybody agree that this down here represents the same as this up here? Everybody agree? Okay, now let's go through this. Let's say that you were trading this and we were only trading with the trend. So on this day, on this price, we, right in this area, we shifted into an uptrend. So our first buy would have potentially been right here. That would have been our first long opportunity with the micro price detector. Why? Because on that date, back in here, on the 15th is where we shifted into an uptrend. On the 14th or the 15th, let me bring this forward. It was on the technically it was on the 14th at 5 p.m. On the 14th at 5 p.m. on the close of that day, on the close of the 14th. So right there. So this would have been our first buy opportunity down here, right there. That would have been our first long, right? 1, 2, 3. We would have then bought. Okay, now let's go for it. Let's see, how would we have done? We didn't get out here or here. We get out when? Holy smokes. We get out here. This trade, again, I want you to understand, on the 15th, or technically on the 14th, because this is the day of the 15th. So the day of the 15th, remember that day bar opens at 5 p.m. on the 14th of the day before. So the 14th at 5 p.m., this thing created, we got long our first entry right there. This trade here produced 340 pips of profits, plus 340. No, yes, and Andrew said yes. Listen, okay. I just want to make sure everybody's clear on this. I am going to literally link this right here, this line, to this chart right here. So this, when this line was created, it's going to link down here at the exact same time. The exact same time. So let me do that. Link. Bam. Right there. That's what it was created. Right there. So, were we in a buy? When this line was created, were we in a buy opportunity, yes or no? No, we were in a sell, right? Technically, we were coming off of a sell right there. Our first buy in the buy zone happened right there. So, therefore, we would have taken that trade. All right, let's just keep going for it. We also would have taken that trade. Yeah, I don't have, I mean, okay. Hold on, let me just show you something here. So this current day is considered the date of the 9th, right? Because that's technically when it was created, but we're on the 10th. So this is the 10th, so it's literally you go a day back, right? Because if I go to the shorter time frame, we know we're actually on the 10th, but the daily actually opened, this day bar actually opened at 5 p.m. Eastern time frame. So again, just understand that we would have went long, and this would have been our second long, and then we would have taken a stop there. So this would have actually been a loser. First loser here. Right, so now we're down to 60 pips. 60. There. All right, so now we keep going. We're still on our buy zone. We then go long. There. And we get out. There. Up 20 pips. Okay? Is everybody following? I feel like I'm making this more confusing than it has to be because it's not really, it's like literally as and this is about as simple as you can get. We buy there. We sell there. So it looks like we took a little bit of a loss again here. Lost 40 pips. Okay. We bought again here. And then we sell here. Okay. So right when we get this sell, 1, 2, 3, it was much like that prior one where we go 1, 2, 3, we shift into a SSL. Let me link this over here so you see. Right there, we get our stop out on this long position, we lose 40 pips, and we shift into a downtrend, right? And so we take this short. So on this, in this buy zone, we took 1, 2, 3, 4, 5 trades. We had a big winner, 3 small losers, and another small loser. Now we're short right here because we're now in our sell zone. Make sense? When do I get out? I get out of this trade when we get 3 of the opposite. I get out right there. This trade here produced 200 pips, plus 200. Are you guys noticing the difference between the winners and the losers? Look at the losers, 40 pips, 60 pips. Look at the winners, 200, 340. Yeah. All right, so now, did I take this long? Nope, I waited for the next short. The next short comes in right here. I stay in this short until when? Until here. Type in a ME if you can do this. The beautiful thing about this is every single one of you should be on the same page. We should all be doing the same exact things. And if all of us, if there's one person making money in this and we're all doing the same things, then all of us make money in this, right? Let me tell you, there's a lot of people making money doing this. All right, so now we're short here. Out here, and we're only going short. That trade, 140 pips, plus 140. So now we're starting to get some good wins. We've got a 140 pip win, 80 pip win, 200 pip win, and now we're in our buy zone. And so, just so you know, I am not counting this long. Can you guys see why I'm not going to count this long? Because when we shifted into this buy zone on this date right here, when we shifted into that buy zone on that date, well, we were already in this long, so I'm not going to count that. I'm going to only count the first long, the first new long in the buy zone, which comes right there. Make sense? So I'm not counting this long here, even though it would have been a great trade. I'm not counting it. I'm counting this one right here. This would have been our first long. Then we would have gotten out here. Would have gotten back in here, and I'll count this. This was, let's see here. This trade lost 20 pips, 20. Why not use the first 3 green? You can. Yeah, so just asked a good question. Why not use the first 3 green in the buy zone? You can. You know, if you wanted to, if like for example, you could have just 1, 2, 3. You could start buying there. If you want to do that, absolutely. That will guarantee that you won't miss some of these big moves. But I'm just showing you the conservative way. Basically saying, you know what, I'm only going to take the new signals in buy or sell zones, right? So now we're long here. When do we get out of this trade? Whoa, when do we get out of this trade? Whoa, Tyson, when do we get out of this trade? Holy smokes, when do we, what? What? Look at this. Is anybody in this room up 720 pips in the Euro New Zealand? And can you see how, as a momentum trader, this last trade, you are up 720 pips in the buy zone. From this, we didn't have any 3 red against us. This thing is, Jerry says I am. That's awesome. Okay. So does everybody agree with all of these trades? Guys, this is so systematic and so easy. This is so easy, and it's so profitable. Not only is it easy, but here's the deal. Here's the things that it does for you. It gives you back more. It gives you back your time, because now what we're going to do is we're going to flip through the markets, and I'm going to show you how fast we can find trades. It gives you back your time, and it sits here. This thing mints money. Okay, so how did this do? 340, lost 60, made 20, lost 40, so that's down 80. Then we made 220, or I'm sorry, 200. Then we made 80. Then we made 140. Oops. Sorry, I got to start over again. 340, down 60, and then up 20, down 80. Come on, guys. Down 80, and then made 280 on those two trades. Then made 140, then lost 20, and then this last trade is up 720 pips. Oh, it goes 1,340 plus 1,340 pips since mid-December. I am ashamed to say. The word shame is, you know what, maybe too bold. That's a pretty strong word. I am somewhat embarrassed to say I am not even close to up 1,340 pips since mid-December in the Euro New Zealand. And you know why I'm somewhat embarrassed to say that? Because I have access to all of this information. I've had this. Can you guys see how you should have been literally minting money just by using this strategy on the Euro New Zealand? It is this easy. This easy. Okay, I'm going to do one more real quick. Dollar, yen. First of all, let's ask ourselves the question. Dollar, yen. Which direction are we trading in? Remember, purple boxes don't count. We only pay attention to closed boxes. Which direction are we trading in? We're selling, right? I can tell you this right now. Unless price has the ability to close above this up here, 1509, if price closes above 1509 today, then guess what? This will turn green. But we can't assume it's going to trade above 1509. Right now, we are in a sell zone. We have been in this sell zone since this period right here. So since the 5th. So now let's go to the dollar yen. Let me mark this here. And all we've been doing since this point is taking sells. That's it. Since that day. So our first short would have come in right here. This first trade you would have lost, 1, 2, 3, you would have lost 60 pips, negative 60. Negative 60. Your second trade would have come in right here. This trade you would have made 40, plus 40. The third trade would have come in right here. This trade you would have lost 20, negative 20. The fourth trade, and again, I get the question all the time, well, do you always make money, Tyson? No, we don't always make money, but you know what we do? We always follow the rules. This is the fourth trade. You would have lost 80. So far, since this downtrend, because it looks like it was an aggressive down, right, and then it's kind of shifted, you're down. But what are we doing right now? If we're waiting and we're trading with the sentiment strength, what are we doing? We're waiting for the next two red boxes down to short. That's what we're doing. That's all you're doing. You guys name the currency pair you want me to go through. What currency pair? You guys pick it. Pound New Zealand. What are we doing? Buying or selling? We're buying. We've been buying since this point right here. So let me mark this. Let me link this over to the lower time frame or to the micro price. So we've been buying since that point, but I'm not going to count. I'm not going to count this first long, right? I'm not counting this first long because I'm saying we missed it. Even though some of you could have jumped in on the first three, I'm going to say we missed that. I'm going to say we would have went in here, 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 here. Okay. Now let's do the math. So 50. So down 50 on this first. So we get chopped a little bit, down 50 on the second. On this third trade, down 20. On the fourth trade, up 20. So down 20, up 20. We're only buying, right? Why are we only buying? We're only buying because we have a green sentiment strength. Up 20. Let's see, if you would have just followed the rules, how would you be doing it? Down 20. Okay, so down 20. Down 60 on this one. Up 20 on this one. I know I'm going kind of quick, but I want to be able to flip. I want to be able to go through live market stuff too. So 1, 2, 3. We made 20 here. This trade here would have made 160 plus 160. Right? Why 160? Because you went long, 1, 2, 3, you got out right here. And then what happened? You went long again right here, you got out right here. So this trade made 20. So let's see, how have you done in the pound New Zealand if all you did was follow the rules? That's it, if all you did. All right, so you lost 100, 120, so you're down 100 there, down 120, down 180. Down 160, you're up 20 pips. So you're up 20 pips so far, but you're profitable. Up 20 pips. Now what are you doing? Are you, if you're a momentum trader right now, are you selling right now? Are you selling this? Let's go back to the sentiment strength. No. No. Because I got to tell you, as long as price stays above 74.98, you will be a buyer. So what you need to do when you get this in your hands, and I want everybody to get this in their hands today, buy on the next 3 green boxes, exit on 3 red boxes. Type it in me if you can do that. It's that simple. Yeah, everybody can. All of you can do this. All of you can do this. All right. What's the next pair? What do you want me to go into next? Let's see if we can get everybody on the same page. Pound yen. What are we doing? What are we doing? We're selling. And you're going to have a sell bias. Unless price can trade above 42.44, we're selling. So let's go to pound yen. So pound yen, you're going to want to put this one on your radar because the next 3 box shift down, you sell. 3 red boxes equals sell. Exit on 3 green boxes. There you go. You see how this automatically gives you the direction and then it helps you short at a high price? You see how prices now went up, we're in a sell zone and we want to short on the next 3 red boxes, which is going to be at a high price? Yeah. There it is. It's that simple. So put pound New Zealand long on your radar. Put pound yen short on your radar. How about Aussie dollar? What are we doing? We're selling, right? Okay. Aussie dollar. You would have been short since this point. You would still be in your short. So what I would do when you get this in your hands, what I would do is wait for price to have 3 green up and then short on the next 3 red box down. So right now we're too far into the move for me to recommend anything, right? I would sit on the sidelines with the Aussie dollar. Euro yen. What are we doing in the euro yen? We're buying. We've been buying since that point. I haven't been. I wish I had been. I haven't been. Should have been. If you would have been buying since this point, right here, let me link this, you would have literally caught this long here, and you'd currently be long right now. Right now you would be up. You would have made 60 pips here in this current trade. You'd be up about 160 pips. Guess what? I have made no money on the euro yen on this big rally that it's had on the euro yen. I've made nothing. Micro price detector and momentum traders have. I haven't. So this thing is literally, it's a systematic process. Not only is it a systematic process, but this also has the momentum course, the momentum breakout course has a trading room. It's the trading room is 3 times a week. It's Mondays, Tuesdays, and Thursdays. What we've been doing is we actually, most of our students, most of you, I believe, in this room had to go through a process of going through what's called the Ultimate Traders Package to first get involved in MTI. And that's all good and great. That's awesome, right? You learn fibs, you learn candlesticks, trend lines, all this, king crowns, all that stuff, which is really good stuff. It takes a while to learn. So what we've done since September, we launched this, for the first time, we launched this to non-Market Trader Institute students. And what we did is we wanted to do it kind of as a test. We wanted to see, could we get traders making money, systematically making money fast? And I got to tell you, the results are just amazing. They're amazing. In fact, since we've been tracking this, and this is all tracked, you guys will get a track record, you guys will be able to get alerts and track records when this all comes out. But here's the results basically straight from the course since we've been tracking this. This is since September, since we've kind of rolled it out to non-MTI students. In our trading room, the calls that have been, it's up 7,287 pips. It's averaging 1,500 pips per month, systematically. That's like $15,000. No guessing on which direction. You guys see how this takes the guesswork out of it? Like, oh, I wonder what Tyson's thinking. I wonder what momentum traders are doing. No, they're buying. Momentum traders are buying. They're waiting for. They've been along since here. That's what they've been doing. There is no guessing. The euro dollar. What are we doing in the euro dollar? Euro dollar. We're buying, right? So what do? We wait for our, three green. Well, you guys see how momentum traders, how you guys should have been looking to buy, and you should have went long right there? Type it a wire yes if you understand that if you were a momentum trader, you would have been looking to buy and you would have bought right here, and this trade right now is up. Oh, give me a second. Is up right around 50 pips. Yeah. So this takes the guesswork out of everything. So again, and what it all boils down to is performance. It's great that it's easy, it's great that it's systematic, but what makes this the most impressive to me is the performance. Is that this has, I say this as kind of a bittersweet thing, this has consistently, since we rolled this out, since this has been a product, and we rolled this out, I think it was mid-summer is when we officially rolled it out for the first time to students. Since this has been rolled out, I have been paying attention to this, and I should have been just trading this, but I've been paying attention to this, and this thing has consistently outperformed me. Consistently. And it's so easy. And sometimes as a trader that's been trading for 17 years, sometimes I get in my own way and I say, well, geez, unless I go into the charts and I do all the sophisticated analysis and I draw the lines and I come up with my own conclusion, then I can't trade it. Well, that's BS. What matters is making money. And I can tell you right now, there are probably 7 or 8 currency pairs where I have personally missed out on making money on because of my analysis. Whereas if I was trading just the momentum breakout strategy, I would have profited, like in the euro yen? And do you see how, remember the euro Aussie example that I gave you? This was my analysis. Euro Aussie, you remember that, right? Remember how I missed out on 200 and some pips? Well, momentum, if I was trading momentum, I wouldn't have missed out on those pips. I would have made them. I'd still be in the trade. Euro New Zealand, another perfect example, is up 700 and some pips. You think in this last long position. I'm not up 700 and some pips. It's frustrating to me because I've had access to this. I have no excuses to not be trading this, other than, well, what I've been doing is I've been doing what I currently do for 17 years, and it's hard to break, habits, especially when those habits make me money. The things that I do make money. But I need to ask myself, do the things that I do make more money than what I have access to? And the answer is no. The things I have access to make more money than the things that I've done for the last 17 years. So guess what? I should probably change it. I've been slowly but surely changing. And I want you guys to be able to have access to this. So here's what we're going to do. I have been told this is we have the class that's coming up next week. If you guys want access to this, I'm gonna be able to give you guys access to this today. You're gonna be able to get this in your hands. I really believe that this is one of those tools, just based on what I'm seeing in performance, what I'm seeing in success stories from these new students. I've been working with a lot of brand new students on this, and the success that's coming out of these courses is huge. I think all of you need to have this in your toolbox. We're willing to do a few things that we really haven't done in the past. But the next class is next week, and I've been told that after next week we're probably not going to have another class for momentum in 2017 because we've got other things, other initiatives, as far as we've got the Chiefs Trade Copier, we've got the anniversary event coming up, we've got other things we're going to focus on. So it's going to be at least probably 7, 8, 9 months, if not throughout the entire year. I think all of you need to have this in your hands. I want you guys to be able to trade systematically, take the guesswork out of this business, define direction, and then get in the direction of the momentum right away. So here's what I'm going to do. We would normally, now this is not a normal day. I'm going to give you guys some bonuses here in a second. I'm going to give you guys a couple gifts, hopefully help you make this decision. So you would normally get 2 months of our trading room, the trading room. The trading room is done on Monday, Tuesdays, and Wednesdays. They go for about an hour. And because the reason why it's not 2 or 3 hours like some of the other trading rooms is because it doesn't take long to find trades. Like they're literally just finding trades, and it's very quick. It's just a systematic process. If you just follow the trades that have been found in these sessions, I'm telling you, they're averaging about 1,500 pips per month just with the trades found in these sessions. They're all tracked. Students are experiencing huge success. Now, I'm going to give you guys access to be able to trade in this room as a bonus. I'm going to be able to give you guys that for 6 months. You're not going to get it just 2 months. And you're going to get it for 6 full months. Now, if you were to go out there and buy this course, the overall retail value of this, when it's all said and done, you would normally pay $34.95. That's not what you guys are going to pay. In fact, we're going to do some things that are pretty special. We don't typically do this with our advanced education products. But what I'm going to do right now is I'm going to, first of all, I'm going to take $1,500 right off the top of the price right now. And I'm going to tell you this. I do not want you to have an excuse to say, oh, I can't do it because I can't afford it. Listen, we are willing to, I've talked to the education specialists, I've talked to the executives, we're willing to finance you. If you have a desire to get into this, we have financial plans, we have vouchers, resources, scholarships, all sorts of stuff to help you get involved in this. And then to put this over the top, because I think every person in this room needs to put this in their toolbox, to have a process, a systematic process on defining where the market's moving, when to get in. Here's what I'm going to do. When you type in your phone number right now with the word me, that's all you got to do. Doesn't mean you're automatically signing up, but what I'm going to give you, if you do decide to sign up, is I'm going to give you, obviously, the substantial discount, and I'm going to give you 6 months of the trading session. So you're not going to get 2 months of trading with us. You're going to get 6 months. So here's the beauty of this. If all you do, now we've been tracking this since September. If all you do literally is over the next 6 months is jump in our trading sessions, join us on Mondays, Tuesdays, and Thursdays, and then all you do is literally just say that you just trade the trades that we put out, and they're all tracked. I am telling you right now, there is literally almost no chance of you losing money. It is almost impossible. And for those that type in their phone number with the word me, we're gonna be able to talk with you about the financing. We're gonna be able to talk, and we're gonna be able to get this in your hands right away. Now you don't have to wait until next week, till the 16th. Not to wait until the 16th. This is actually going to be available right away. We put on a class 2 weeks ago. We had a class. And the success out of that class is huge. 2 weeks ago, but that class is recorded, so you can actually get into that class and watch the recording of that class. Over the weekend, what I want you guys to do is watch the recordings, get the strategy downloaded, get used to the SSL, get used to the micro price detector, rewatch this session, kind of get used to the process of defining direction with the SSL, and then going back. And I'm going to tell you right now, when you guys get this in your hands and you back test this, like for example, look at the EuroCAD. How about this? What if you would have bought down here? Look at this. This one trade. We're talking 2 trades, the EuroCAD and Euro New Zealand, 440 pips. This is as systematic and as easy as it gets. Now you're going to be able to get this in your hands right away. Now, those are the bonuses I'm willing to give you. 6 months of trading with me, my team, micro price detector. Absolutely free. I'm willing to give this to you in your hands right now. I'm willing to have you get this up and going. And here's how I want to kind of hopefully put it over the top. It's not necessarily about how much money I can show you this thing has made in the past and how much money I'm making or whatever it might be. And I got to tell you, I'm not up 400 pips in the EuroCAD. I'm not up 700 pips in the Euro New Zealand. I should be. You should be. The momentum traders are. Jerry's typing this in. Jerry is. You guys should be. But here's the thing. It's students. So these are results straight from the momentum class. So the instructor says every time, hi, how you guys doing? How much money you're making? And these are the results that come through. 1,000 pips, 350 pips, 200 pips. So it's about student success. 220 pips, 148 pips, 1,440 pips. And I can go on and on and on and on. Now, here's the thing. There's some of you in here that you have the desire, obviously the want to be a professional trader. You don't have a systematic formula. There has never been an easier, more systematic formula than I've just shown you today with the momentum. What I want you to do is this, very simple. If you have a desire to do this, if you want to do this, we have a financial plan for you. We can get you in that room for 6 full months absolutely free. I don't want you to look at this $19.95 and say, ooh, I just can't do it. Because I believe that if you have a will to do this, we will find a way. I want to thank those that have typed in their phone number. I have a little bit of something that might be able to get you over that edge in a second. But if you typed in, I know a lot of you typed in me. Steven, I see you typed in me. Go ahead and type your phone number in. We do need your phone number. We'll reach out to you. Here's another thing that I've been informed. I've been informed that this is going to be, today is the last day that we're going to be talking about the micro price detector, talking about the momentum class, because we're moving on. Next week, we're starting to prepare for the anniversary event, all that. We're moving on. This is it. This is going to be your last chance probably for at least the next 9 months. I do not want you guys to miss out on this opportunity, especially when we're discounting this thing huge. Okay? Stephen, thank you. Jamie, think I've got your number. Also, I see that, let's see here. Jerry, I see you typed your number in. Jerry, or I'm sorry, you typed in me. Jerry, please type in your phone number with the word me. We'll make sure we reach out to you. Now, here's the deal. I don't know how much I can say about this, but I will. I'll go as close to the edge as I can. So if you haven't typed your number in yet, and if you are not a momentum trader, what if there was a way that we could get this all in your hands today and eliminate all of your risk? What if we were able to structure a plan for you where there's no risk to you? Either we're going to show that this is one of those tools that you can't live without in your toolbox, or you have no risk. If we were able to do that, the answer to this question should be yes. Would you do it? Well, yes, you would do it. Yeah, I mean, obviously the only reason why you don't is because the perceived potential risk in it, right? So here's what I wanted to say. We have ways. I can't go into a lot of details, but we have ways where we can eliminate all your risk on this. Where it's either going to be one of the greatest tools you have in your toolbox or, well, you have no risk. Again, I can't go into a lot of details. All I want to do is this. If you are not a momentum trader yet, I want you to type in your phone number with the word "me." That's it. Have a conversation with your education specialist. They'll tell you about the somewhat risk-free option. They'll tell you about how we can eliminate the risk, how we can get this in your hands today. They'll tell you about the financing programs, all that kind of stuff. And then it'll be your choice. Then at that time, you'll be able to make a decision on, yeah, holy smokes, yep, you know what, this is something that makes so much sense to me. I want to do this. Or you say, you know what, I'm not quite sure. But at least you know. And so here's what I want to do. If you are not a momentum trader yet, if you haven't typed your number in, and anything that I went over today as far as finding direction, pinpointing your entries, if any of this was intriguing, which really all of this should be intriguing to you. I mean, the question is very simple. Are you up 440 pips on the Euro CAD? Are you up 700 pips on the Euro New Zealand? Did you make 1,000 plus pips on the Euro on the Pound New Zealand over the last 2-3 months? If not, honestly, you got to have this. You got to have this course. You got to have this process. It's a part of my toolbox. It's one of those tools I'm going to start using much, much, much more often. So again, if we could find a way to eliminate your risk, meaning we make this where there's no risk, it's either going to be amazing or you get what you paid back. If there's a way we can do that, then the answer is yeah, you do it, right? Well, we might be able to do that for you. So all I want you to do is type in your phone number with the word "me" if you're not a momentum trader yet. That's what I want you to do. And so I want to thank those that have. Leslie, thank you. I've got your phone number. Thank you for that. Jerry, thank you. Marty, thank you. Stephanie, Jamie, Nikki, thank you. I've got your number. Robert, thank you. Now remember, when you type your number, it doesn't mean you're automatically signing up, but it does mean if you do decide to go forward, we have ways in a structure where we could potentially eliminate risk. And what I mean by eliminate risk, I mean literally. If all you do is follow us and you don't conclude that this is one of the greatest tools you have, I mean, there's no risk. Like, think about that. What does no risk mean to you? Because guess what? That's what it means to me, too, and that's what I'm telling you. And so if you do decide to go forward, you're also going to be entitled to the 6 months of trading sessions for free. And you got to remember, we have students that pay $500 a month to us to be in our trading room. So you guys are going to get this absolutely free. That's a $3,000 value as a bonus when you decide to go forward. Now, if all you do is follow us and our team for 6 months, I am telling you right now, there is zero doubt in my mind that you guys will be blown away. That this literally, I almost think that you guys are going to get to a point where I don't want to say you're not going to attend these webinars, but I don't think you're going to attend as many of these webinars because you're going to be off doing the things you want to do in life. And also, I don't think you're going to attend these webinars because, unfortunately, if you've attended my webinars over the last week and a half or week in these client webinars, then I've actually held you back from making as much money as you could have made in a year. Awesome. And those momentum traders that literally say, you know what, I attend the webinars every once in a while, but I don't need to because I just follow the process, those traders are up huge. So I actually believe that a lot of you, when you do this, I love seeing you guys around. I love you guys, attending these webinars. But I got to tell you, instead of attending the webinars, I'd rather you don't have to attend the webinars because you're already making money and you're out there golfing, you're out there traveling, you're out there living your life. Right? That's what I'd rather you do. So again, I'm going to end here. I want to thank those. I want to encourage every person in here, everybody. Very simple. If you're not a momentum trader, if you want to potentially get this in your hands today, get into our last class of the year, which is next week. Get this up and going today. Be able to trade with us for 6 full months, 3 times a week, and potentially be able to do all of this with no risk to you. 0 risk. Yes, and I mean that. Just simply type in your phone number with the word "me." That's it. You type in your phone number, we'll reach out to you. We'll give you the details, the ins and outs. You'll be able to then make your decision. So again, I want to thank those. I'm going to end here, but I do want to thank those that have typed in their phone number. And I want to really encourage every person in this room to do the same if you haven't yet. Don't let me shut down without typing your phone number. Curtis, thank you. I've got your number. Ron, Michelle, thank you. I've got your phone number. Sarah, thank you. Leslie, Marty, Don, thank you. Todd, thank you. Jamie, and Eric, I've got your number also with the word me. Now I'm going to keep this open for a few more minutes. I hope that all of you give this a really, really detailed thought. I hope that you type your phone number in. You have a 5-10 minute conversation with your education specialist. If you're not a momentum trader yet, talk with them. See what we can do. I can tell you right now, if you become a momentum trader, this is a systematic process. You'll never be guessing where the market's moving, which direction you should trade in, where you should get in, and where you should get out. The guesswork is over. It's a systematic process, and this is averaging 1,500 pips per month on 7 currency pairs. You guys can too. So I'll keep this open for a few more minutes, everybody. If you haven't yet, type in your phone number with the word me and start rocking and rolling. Thanks, guys.